Walmart first, let's say. This is a company that's pretty different since you left it back in 2014. You think through things like Flipkart and Jet.com and those purchases, and then also the sale of Asda. This company has changed a lot. What do you think about it?
Sure, they have. You know, they've declared what their strategy is, and they're executing it, and they're doing a pretty good job at executing it. You just sort of think about what happened in the last month there. They bought Flipkart for $16 billion. Flipkart sells about $5 billion and loses $1.5 billion. And they sold Asda, which was about a $15 billion retailer that made about $1.5 billion. So they're all in on digital and moving in that direction. And it's very expensive. You know, that one move right there will cost them about another $2.5 billion in operating income for the year. But they're committed and they're moving in that direction.
You sound a little skeptical. You think that's the right move?
I'm not skeptical. You know, they've declared their intention and they're moving that way. I'd like to know where it ends. And I'd ask Amazon the same question. What does this look like when the transformation is over? You know, in 2015, Walmart delivered $29 billion in operating income. And this past year, they delivered 20. And the moves they recently made will cost them another 2.5. So they're in the high teens now in operating income. What does this look like from an investor's perspective? I think, you know, it's a shareholder week would be a good week to sort of outline that.
You know, it's a bit of a catch-22 for any traditional company that's trying to keep up with an e-commerce company, because they have to basically change the wheels, drop the engine, and do all of this while they continue to operate on the fly. Amazon's been able to do this and has had kind of a free rein from its shareholders saying, yeah, we're okay with you continuing to invest and not maybe showing as much profit now as you can down the road. I know there have been skeptics all along with Amazon, but Amazon now seems to be at the point where they can actually ratchet up profitability pretty quickly by doing things like raising Prime, how much they're charging for that, and not getting pushback from customers. Do you think Walmart is going to be able to do those things too?
I think, you know, Amazon has redefined what it looks like to be an investment company, not an operating company, but an investment company. Investors have remained completely exuberant. I thought Amazon was overvalued at 400, and it's 4 times that today and growing at 60% a year. You know, it's a business that we need some more information. I feel that way. You know, they're operating in different segments. They're operating in retail and they're operating in web services. They bought Whole Foods. Everybody's forgotten about that. It's a $13 billion company. Haven't reported same-store sales. Haven't told us really how Whole Foods is doing, other than to say they're happy with it.
Bill, if I made you king for the day or regulator for the day with no court, you would do what?
I'd like to see Amazon report and maybe even trade separately by segments. You know, investors need to understand what's happening in web services. Looks like a really good business and a place that investors might want to put their money.
Are you making this argument as an investor? Meaning, look, a lot of people want more transparency. It just makes the investment case easier once you know more information. Or are you making the case that there's something fundamentally wrong about the structure of the company vis-a-vis competition?
I think the way that they're operating, where they use the profitability of a completely unrelated segment of business to drive out competitors and build market share in another segment of business, would be akin to you know, ExxonMobil deciding to get into the restaurant business and using profits from oil to sell below cost in the restaurants to build market share. And that's anti-competitive.
You know, Bill, it's Brian Sullivan. Listen, you guys, this is interesting, though, too, because you guys for years were the big retail bad guy in America. I mean, you may disagree with that, but there were protests around Walmart, and they were saying Walmart was destroying small towns. Walmart has sort of shifted now to becoming, in some ways, the good guy, and Amazon.
Or the underdog.
Yeah, or the underdog, in a way, exactly. So you've kind of flipped the script. If you had to defend Amazon in a specific way, how would it be?
How would you defend Amazon? They're a brilliant business and excellent at customer service, and deliver a product that really can't be matched by anybody in retail today. And they built their business organically. So you know, they have a lot of good things going for them. I use them. They're a great service.
But Bill, to Brian's point, all of these same arguments were made against Walmart over the years by small retailers who said, look, we can't compete because Walmart drives down prices so much. They are selling. They take it out of the vendor's pocket and pass that on to the consumer, and they are killing us because we're not big enough to be able to do that. That's anti-competitive, they said.
Well, the difference is, Becky, is that Walmart did it in the same line of business. They didn't have a completely different business model or different business segment and take the profits from that and drive it into the cost of the business.
You're talking about Amazon Web
head-to-head.
Services where they're making money?
Yeah, and advertising and the other models where Amazon's deriving what little profit they can deliver. Walmart went out head-to-head, knuckle to knuckle, and won market share in retail by executing a business model that customers wanted. Amazon's sort of
I think Amazon
doing
would say
that.
the same thing.
Well, they are in part and losing money at it, and they're gaining traction and profitability by other business activity that has nothing to do with retail.
Before we let you go, how do you think about the big tech giants? Would you split them up too?
No, as long as they're operating in a space that's defined and reported, I think investors have pretty good clarity into what those guys are doing.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.